fears over the Omicron COVID variant eased. Hong Kong listed shares of Chinese e-commerce titan JD.com plunged 7%, while Tencent surged 4.2%. Those moves came after Tencent announced that it will distribute the majority of its shares in JD.com to its shareholders, valued at about $16.37 billion. Hong Kong's Seng index closing 0.4% higher to about 23,000 points. Mainland Chinese stocks closed higher, and the Nikkei in Japan nudging higher 0.8% in positive territory. Stock futures were little changed following the second trading day, in which equities climbed higher as investors in the U.S. looked past jitters about the spread of the Omicron COVID variant. Investors will get some key inflation data out of the U.S., including prices for core personal consumption expenditures, as well as consumer sentiment numbers, and the jobless claims figures will also be released. Locally, we did have a couple of news come through, especially when it relates to Ascendus, which is one of the companies we'll be focusing on. Just a little briefly to give you a sense as to what has been happening with this particular company. So lenders of Ascendus Health have pulled the plug on the beleaguered firm, giving it a week to provide firm answers in terms of how they're going to be able to be dealing with their debt and also how it's going to be repaid. The move comes after a board shake-up at a last-minute AGM on Monday. Outgoing CEO Mark Sadi confirmed the seriousness of the lenders' demands, but said that they are executing plans already in place, such as the sale of Ascendus Pharma, a transaction that was initiated in June. This is just the latest setback for Ascendus, which spent much of this year trying to get out of its spiraling debt. Its shares fell as much as 18% yesterday. So we're going to get that graph on screen just so I can give you what the Ascendus share price has looked like over the past 10 years. We did start to see that fall happening just around 2017, going into 2018, and it continued to drop. Over the past 5 years, that particular share price dropping around 97%. To give you a sense as to what exactly is happening with Ascendus, currently it's valued at around 337 million rand. It still needs to conclude this debt, which I mentioned about, and it had to let go of its profitable European businesses to settle about 8 billion rand in debt. But the issue that still remains is that it still has 15 million euros in reinstated debt to deal with, 20 million euros in a 2-year facility that covers head office and restructuring costs as well as working capital. Currently, it has 3 remaining businesses in South Africa. What happened at this particular AGM is that the current chairman was kicked off, but he will be moving into a CEO role, and the former CEO, Carsten Wellness, will return to the board because he was involved in the spending spree when Ascendus was basically on an acquiring spree, so he'll be joining the board. And then just quickly touching on Naspers, in a move that bolsters its investments in mobility and transport technology, Naspers South Africa-focused venture arm has put down 54 million rand to back a local technology platform that helps business without bank accounts or access to credit to buy and rent vehicles for everyday use. Its foundry unit has, which was rather led about 91 million rand in funding for Planet 42, which is an artificial intelligence-based car subscription platform, investing about $3.4 million. That's the Naspers share price. The highest that we got to that was around February, trading at around 3,826. It's come off just a little bit, currently at just over 2,573 rand. And then just to touch on Prosus, they continue to pour money into India, where the group made its largest acquisition to date earlier this year, backing a seafood marketplace platform in a 637 million rand funding round. The venture arm of Naspers International unit this week jointly led the funding round in the technology-backed seafood marketplace called Captain Fresh with a U.S. investment firm, Tiger Global. Unlike fellow technology investors like Google, Facebook, and Amazon, Prosus, which is valued at $2.5 trillion, trillion rand on the JSE, has focused its strategy on conquering emerging market countries. So that is a wrap up of everything that has been happening locally on the JSE, especially as it relates to a company that is quite big and one that is going through a rather difficult time.